And that's exactly what we're seeing this year. Bonds are having their worst year in their history.
Right.
Gold is down, which is, according to Peter Schiff, impossible. If we have 8% inflation, gold should be up, but it's not. Bitcoin's down. Well, that shouldn't be the case, but it is, because these things are being sold to meet margin calls in the traditional world. Yeah, well, I think you summed it up actually pretty well. I mean, the Fed is breaking things, and I find it interesting in that these are really smart people by our definitions of smart, right? I mean, buildings full of PhDs, long tenured professionals, and yet they seem to make periodic policy errors and then think that making an error in the opposite direction will fix the previous error. And it's just kind of crazy. So, it started with printing too much money, right? Having liquidity conditions that were just too loose. We had literally emergency liquidity provisions 10 years after the global financial crisis. You say, well, why would we do that? Well, it's really complicated in that the Fed exists for a different reason than most people think, right? The Fed was created not by the government, right? It's not federal, and it has no reserves. It's not a federal agency, and it doesn't actually have reserves like a bank. It is a private institution that was created by banks to basically be a lender of last resort to the banks to keep them from, going under like they did in the panic in 1907, the Knickerbocker panic. So if we take a different lens and think, well, maybe they don't care about the average investor, maybe they don't care about unemployment and stability in prices like they claim, maybe it really is as simple as, how do I keep the banks from going under? Because, without a healthy fractional reserve banking system, economies don't function very well. You look around the world at countries that have poorly functioning banking systems, not really great places to live. I mean, they may be beautiful or whatever, but in terms of bad currencies, usually bad governments, not a lot of prosperity. You look at strong fractional reserve banking systems around the world, better places to live. Not perfect. I'm not saying that America is perfect or Europe is perfect or Japan is perfect, but relative to some countries that don't have that fractional reserve banking system, better. And there's more opportunity. But from the lens of, well, if it's about liquefying the banks, then it made sense for the better part of a decade to give them access to basically free money, because they were so decimated after global financial crisis because of the bad decisions they made pre-crisis. Most of them should have been out of business. I mean, literally their liabilities exceeded their assets. And you look at a place like Iceland, they actually let the banks fail.
Right.
In America, that wasn't going to happen because the regulators are, let's say, lobbied, fancy word for bribery, lobbied to not let that happen. So they got, almost $1 trillion. In fact, there's a reason the Genesis block, and I actually on Monday had my Genesis block socks on, my Bitcoin socks. And it basically has a picture of the London Times, the chancellor approves a second big bailout for banks. It's not a coincidence that Bitcoin was started in the depths of the great financial crisis. It was being worked on for a long time before that. It was released exactly and precisely at a time to maximize the social commentary on how bad that system was and to provide a way for the average investor to opt out. So that's a really, really long way of saying the Fed serves a different master than we all think. Whether they raise 75 basis points, 100 basis points, or 50 basis points really has very little to do with economic growth and employment and stability of prices. It really has to do with how can they best keep the banking system functioning in a sound way. And they've kind of painted themselves into a corner, right? They printed all this money post the lockdowns in 2020. They expanded the excess reserves. And those reserves, if you look at the velocity of money, aren't getting lent because there's no demand, right? The average person is full up to here with debt. They don't want more debt. Small businesses have been crushed because of the lockdown policies. So there's no demand for new business loans. And so you have this problem that velocity of money is falling as the supply of money is rising. It's antithetical. So what do? Well, in the old days, I used to be able to jumpstart the economy by lowering interest rates.
Right.
Well, if I'm already at zero, I can't lower them further. I go negative like they did in Europe, but that didn't work. They actually went into recession, and Japan went into recession with negative rates. So I think they really believe if I raise it, then I can get to a point where I can lower it again and jumpstart this moribund economy. And here's the thing. We're probably in recession, but it's not a depression. It could turn into a depression. I mean, if you look at history, we had a depression in the 1840s because of some bad policy decisions around banking. We had a depression in the 1930s around some bad policies related to banking and trade. And here we are in the 2020s, and it's a 90-year cycle. Each generation forgets the sins of the previous generation. So I think they are on the verge of that same bad policy decision to over-tighten. But here's the thing. If you threaten one thing and then you don't go all the way through with the threat, you can actually achieve an interesting outcome. So let's say they only did 50 today. I'm not saying that will happen, but let's say they did. What would happen? The markets would soar, right? Crypto markets would soar. Everybody would be like, oh, they're going to be back to printing money. Maybe, but they did contract money supply in the last 12 months, first time in over a decade. It wasn't a lot, about 3%, but that's not an environment conducive to risk assets. And part of the problem, I think this is a really long answer, but part of the problem in my mind is leverage.
Yeah.
Right? Leverage is a problem throughout the system. There's too much leverage in traditional financial markets, right? Stocks and bonds. And that's the reason that, stocks have been hammered so hard this year is when you're over levered and stocks start to fall, well, you can't sell the stock to pay back the debt. So you got to sell something else. So what happens is you sell what you can sell. And in liquidations, not bear markets, but in liquidations of leverage, cash, gold, and Bitcoin, these stores of value and bonds tend to underperform. And that's exactly what we're seeing this year. Bonds are having their worst year in their history. Right. Gold is down, which is, according to Peter Schiff, impossible. If we have 8% inflation, gold should be up, but it's not. Bitcoin's down. Well, that shouldn't be the case, but it is because these things are being sold to meet margin calls in the traditional world. And that is an environment that in 2020 happened really quickly. Remember, we flash crashed down to, 3,800. And then bam, we were back to 10,000 within a few weeks. Here, it's been more of a slow, steady grind down as increasing pockets of leverage are found, unwound, and solved. They say a good economist says what or when, never together, right? So you could say, well, we'll have a bottom, but I'm not going to tell you when. Or you could say on, June, 30th, 2023, something's going to happen, but I'm not going to tell you what. So I'm bad at short-term predictions in the sense that there's just too many variables. And in a highly levered world, it's fraught with peril. But here's what I do think, right? It's funny. I tell this funny story that I got media training one time. So I've been in media, most of my career. Right. And someone said, you should get some training. So I went to the training, and guy sat me down like this, and he started to ask me questions, and He asked me the first one. I answered it. He said, "What are you doing?" I said, "What do you mean?" I'm answering the question. He says, "You never answer the question. You deflect and redirect and talk about what you want to talk about." I said, No. I am a dutiful firstborn. You ask me a question, I will answer it. So you asked me the question, what do I think? I actually do believe crypto winter is over. I believe we're in crypto spring. I believe we have seen the bottom. That wick down to 17.8 or whatever it was, I think was the bottom. That doesn't mean we can't retest it. It doesn't even mean we couldn't go a little bit lower than that. But I really do think that the cathartic unwind of the leverage in Bitcoin happened. And I do think we're having a little follow through here with a buy the rumor, sell the news about the merge. I think there were a lot of people that thought, when the merge happened, suddenly everybody was just gonna buy Ethereum. Like, remember Y2K? Remember the world was going to end on, January 1st, 2000. And everybody, the Fed put $500 billion into the economy, trying to get everybody ready. And everybody was poised. And then nothing happened. Literally nothing happened. A couple machines didn't work, but pretty much nothing happened. And I think that's kind of what happened here is the merge happened. And we didn't see electricity usage collapse because the ETH miners just turned on a different algorithm because they need to make money because they have these locked in electricity contracts. And so the whole ESG narrative, I haven't heard anybody talk about the ESG narrative in 2 weeks because it didn't happen. Right. And so maybe on the margin, there's a little bit less electricity being used, but for what? Now we have arguably a less decentralized, and they'll we have arguments back and forth. But look, if I can get the authority to confirm a block with a single stake, that doesn't sound decentralized to me. Even if I am a good person, I think I'm a good person, but if I was given the opportunity to fudge, would I do it? I hope I wouldn't, but I don't know if the stakes were big enough, maybe even good people will do bad things. And we said, but then we'll just fork and we'll go do something else. Like, okay, but we did that with BSV and BCH, and the longest chain still wins. Bitcoin's still the king. So I don't know. That's a rambling answer to your question. What's going to happen? Look, I think my personal belief is we're in recession. It's a shallow kind of 2001 style recession, not a depression. I think the Fed could over tighten and break things. But here's the thing. How many Fed hikes are going to change the price of wheat coming out of Ukraine? Doesn't matter. It has nothing to do with it. How many rate hikes are going to change the price of natural gas from Russia to Europe? Doesn't matter. You could hike 50 times. It's not going to change the price of gas. They're not going to lower the price of gas because it's they got you over the barrel. How many rate hikes is going to change the zero COVID policy in China and fix the supply chain so I could actually trade in my car and get a new Kia? I want a new Kia. I can't get one. I literally can't get, and it's a Korean car, not even, a Chinese car or a Japanese car, but the components are made, some of them in China, and they can't get them. So I can't get a new car. Literally, there's 3 in the whole country. And one's in Hawaii, which I guess that'd be a fun trip, but I'm not sure how I drive it back. And there's one in Georgia, but, I'm sure other people in Georgia will pay more than I'm willing to pay. So I think we're in a recession. I think because of that, the Fed will reverse. When they reverse, we're going to have a face melter of a rally. A face melter, because the shorts are going to get scorched. Yep. And the amount of shorts in crypto is massive. In November, people don't talk about this enough. In November, when the SEC decided not to approve a spot ETF and approved a futures ETF, right? There was method in their madness. That was not a random decision, right? What that did is the same thing that when they approved gold futures or oil futures, when you can create paper commodities instead of physical. Like in the old days, if I want to sell you a barrel of oil, I actually had to have a barrel of oil to deliver to you. Right. I couldn't just make up a paper contract and say, yeah, you buy this barrel of oil and wink, wink, I'll get it if we actually settle. But, we'll just settle up before I have to deliver, and we'll just, we'll settle up the accounts. Well, what happens invariably is people say, oh, that's an easy trade. I'll just do that. And they create too many paper commodities and the price falls. And so look at gold prices have been spoofed for years because of this. Oil prices have their boom and bust cycle because of it. We got to $140 and we went to $26. Then we went to $120. Now we're back to $80. And I think the same thing's happening in Bitcoin is the banks are short the heck out of this because they're the other side of BITO and BTF that are long futures because someone's got to be short. And, speculators are just the opposite of hedgers. Right? They're a necessary part of markets, right. But they can also manipulate markets if they have more capital than the hedgers. And in this case, the banks clearly have more capital than the providers. And so I believe there's downward pressure, and you can see it if you look at the Bitcoin chart off the bottom on June 13th. We made a nice, beautiful accumulation pattern, higher lows, higher highs, 17, 18, 19, 20. Then we started hitting 22, 23, and then we'd spike up. Like if you look at July and August, we'd hit 24K over and over, and bam, there were sellers. I mean, just massive sellers. And it was an ugly looking chart. I mean, it was a hugely distributive chart. And so then we had the correction back down to 20, and now we're stuck in this 1920 zone. We're starting to see more accumulation. In fact, today was a good day. It's good we're recording it today. We made kind of a second double bottom. People say that doesn't exist, right? Triple bottoms don't exist. Well, we made a bottom in June, and then we made a second bottom in August on lower volume. That's usually a good sign. Then we started to rally, but then we rolled over again on all this fear of higher rates. But this morning, and it tells me that he's going to hike less than people think, because someone always knows before the actual stuff happens. Sure. It's funny how that works. So my guess is it'll likely be 75. It could be as low as 50, but it's likely 75 because they put in people's brains that 100 was possible. Yeah. And if you do 75 when people are thinking 100 is possible, oh, that's a win. Well, but 2 weeks ago you thought 75 was high. So it's all about this gamesmanship. And so if that does happen, I think we could get a little ripper. If they were to do 50, it'd be a face melter.